Hi, this is P R Sundar. Welcome to this special episode, Nifty at 22,000. Many people may think that this is a clickbait thumbnail. No, it is my view. But before starting, let me tell you, I have right to be wrong. Many times my predictions have gone wrong, but at the same time, many times my predictions have gone correct. And let me tell you the background. A small story. 2020, coronavirus came, the markets crashed all over the world and India also no exceptions. So Nifty went to 7,500. Then after that, Nifty started recovering slowly and it came around 9,000 to 9,500, something like that. And that time, I just came out with a video. Which one will come first, 7,500 or 15,000? I gave my reasons, argument, and I said Nifty will come to 15,000. That was the time I started my YouTube. I did not have many followers. There was one popular YouTuber and who had nearly 10 times more than my followers. And after seeing my video, he came out with a video saying that Bank Nifty will come to 10,000. And he said, I am not saying that Bank Nifty will come to 10,000. My data is telling me. And then, all kinds of arguments he has given. And what has happened? Later, Nifty not shot up to 15,000. It shot up to 18,000. And the Bank Nifty has shot up to 40,000. Forget about 10,000. So that was one prediction. And later, around the same time, Bank of America came out with an article saying that the gold will hit 3,000 US dollar per ounce in international market. And immediately I came out with a video by saying that gold will not come to $3,000 at all. At the end of the video, that time, my followers are very little. I wanted to increase my followers. So I said, okay, let us see who is going to win, whether P R Sundar or Bank of America. But what happened? The gold has never gone to $3,000. And after 1 year or 1.5 years, even Bank of America have taken back their words. Barring unforeseen circumstances, so we see whatever the risk, reward, whatever the parameters affecting the markets, and we predict something. It may happen, it may not happen. And in fact, last year in Money Control, so they interviewed me. So they asked me what was my target for last year. I said for last year my target was 19,000 and this year my target was about 20,500 to 21,000. And last year I said target was around 19,000 but Nifty hit a high of 18,900. You can't be accurately correct because I used to tell I'm a mathematician, not a magician. I don't look at the horoscope and decide. And it was very close prediction. And then of course market fell. And this year, I said, like 20,000 to 21,000. And still, we have 6 more months. We do not know. It can go to 21,000, who knows? Let us wait and see. Now, whatever the changes, and people say, sir, sometime you become bullish, sometime you become bearish. I used to tell, I'm neither a bull nor a bear, I'm a chameleon. When things change, and I also change. I am not a permanent bull nor permanent bear. Now, what has happened in 2022 December, Nifty hit 18,900. So 2021, after Nifty hit 18,600, some kind of selling started happening and FIIs continued to sell. And that FII selling was so huge. Every month FIIs used to sell 30, 40, 50, 60,000 crores. And they continuously sold for more than 3 lakh crore. At some point of time, the Reserve Bank of India's deputy governor had to come out with a paper saying that, this FII selling can potentially become a black swan event for India. And then because of that, then after that, this Russia-Ukraine war broke out. Then the US inflation issue came. US inflation shot up 9%, which is a 40-year high. And because of that, market started falling. So market fell, recover, So Nifty has been trading between 15,200 and 18,900 for the last 2 years. However, if you look from October 2021 till now, Nifty has not gone anywhere, which is nearly 2 years. So for nearly 2 years, Nifty has given zero return. What happens many times, Nifty may be underperforming for a long time, but in the next 1 or 2 years, it will outperform to such an extent that it will compensate all the losses in the past. Just to give more specifically, nowadays you put your money in bank FD, you get 7-8% interest rates. So logically or generally, the stock market used to give slightly better return. Over a longer period of time, Nifty has given 1 or 2% more than the fixed deposit return. So what happens sometimes, for 5 years, Nifty may give zero return. Sometime it happened in 2000, 2003, like that. When you get zero return for 5 years, but whereas 5-year return in fixed deposit might be 50%. So what will happen? The Nifty in the next 1 year or 2 years, it will shoot up 60%, 70%, so that the 6-year period together, you see, FD would have given 60%, Nifty would have given 65%. So that is how the stock markets move. So last 2 years, Nifty has almost given zero return. But in these 2 years, a fixed deposit would have given 13 to 15% return. So maybe next 1 year or 2 years, assume that it is 1.5 years, 2 years, let us say. So in 2 years, fixed deposit would have given 30%, but Nifty has given 0% in these 2 years. That means in the next 2 years, it has to give 30% in order to match the fixed deposit return. Of course, there is no golden rule, but generally it happens. The last 2-year losses will have to recover, and then plus it has to give positive return. So if you see like that, since we have got almost zero return for the last 2 years, I will not be surprised if I get 20% return during the next 1.5 years. Right now, approximately Nifty is trading closer to 19,000. From 19,000, if you take about 20%, so that will be approximately 3,800 points. So that can take Nifty above 22,000 very, very easily. Why is it not possible to get 20% return 1 year when we got 0% return for the last 2 years? It's possible. Okay, it is possible, right? But then how come all of a sudden Mr. Sundar is coming and putting up this video? Why he did not put it 3 months before, 4 months before? Stock market, the people say Newton's first law, a particle which continued to move in one direction, it will continue to move in the same direction unless acted upon by an external force. The same way, the stock market going down, it will keep going down. The stock market going up, keep going up unless some external force is being applied or some significant change. What is that significant change? That significant change has come now. That is why I'm coming out with this video. That significant change was not there 3 months before, 6 months before. When FIIs continuously sold in 2021 and 2022, and people said an Indian stock market is always trading at a premium and FIIs do not like this premium. They are selling in Indian market and they are pumping the money in Chinese markets. And that time I put a tweet in my timeline by saying that best of luck for the FIIs. And I always say a stock market that is continue to go down will continue to go down, continue to go up, it will continue to go up. Chinese markets, they are down for the last 15 years. Just I will tell you, just for comparison, sometime in 2008, just before Lehman Brothers collapse, Nifty was near 6,000 and Shanghai index was also around 6,000. Lehman Brothers collapse, all over the world markets fell. We fell to 3,000, they also fell to 3,000. And then after that, from 3,000 we shot up to 18,000. That's almost 6 times. But Chinese market shot up from 3,000 to 3,500. And forget about 6 times. They did not even cross the pre-Lehman Brothers collapse level. Pre-Lehman Brothers collapse level, ours was 6,000, came to 3,000. From there we went to 18,000. That is 6 times from the bottom and 3 times from the pre-Lehman Brothers collapse level. But Chinese markets are still below the pre-Lehman Brothers collapse level. So it's a very, very long-term underperforming market. So their FIAs have pumped in. And what has happened? They waited 1 year, they waited 2 years, and now they understand that the Chinese market is in the long-term bear market. They are not going to make money. Now there is a change in the FIA mindset. Now they are pulling the money out from Chinese markets and they are pumping into few other emerging markets, and no wonder their favorite destination is India. During the last 1 month, FIAs have bought for more than 30,000 crore in cash market, and Nifty has shot up from 16,800 to 18,800 in the last 2.5 months. Now we are within a striking distance to all-time high. Number one, last 2 years we have been underperforming hugely. In the past, experience says whenever the consolidation is long, ensuing breakout will be more powerful. So ours is a 2-year consolidation market. So as and when markets break out, there can be a significant rally. Number two, those FIAs who are bearish about India, who sold India and bought China, now they are reversing that trend. So they are selling China and buying India. Number three, even now you see, right now this video is being shot on Wednesday. Nifty is just very close to all-time high, but still look at Infosys 20% below all-time high, TCS 20% below all-time high, and HDFC and HDFC Bank, the entire HDFC group did not do well since coronavirus. Particularly HDFC and HDFC Bank underperforming ever since they announced the merger issue. And Reliance has been consolidating between 2,200 and 2,800 for the last 1-2 years. The markets going to all-time high without the support of index heavyweights. Broader market has been doing very well. So just imagine if index heavyweights start catching up, and then there is a possibility the market can move significantly higher. So number one, long-term consolidation, market can break out. And number two, FIAs are turning their sentiment. And number three, broader markets are doing very well. But as and when index heavyweights catch up, the market can move higher. Number four, Russia-Ukraine war, US inflation, I think those things are settling down. So the problems are getting solved one by one. And I think, going forward, there may not be any bigger problems. And then fifth one, look at the economic data for the past few months, whether it is of GST, which is the highest collection. India may be included in the global bond index. And then, our PMI services data, it came more than 60 last month, which was one of the highest. Economic data also looking good. When all these things is happening, so there is a possibility that market can move significantly higher. And then why 22,000 by October? Generally, October, November is a major festival season for us, Deepavali. That is when, lot of euphoria will be there, market may peak out. If this year, let us say market come to around 20,000 or something, there's possibility, because which is another 1,000, 1,200 point. We still have about 6 months. And then from there, from 20,000 is just another 10% for the next 1 year. And so by next Deepavali, there is a possibility that Nifty can hit 22,000. This is my argument, and this argument is based on the facts which I presented and also bearing unforeseen circumstances. From now to next Deepavali, any bad thing can happen, but let us hope. And usually 1929, there was a big crash in the US. They call it as Great Depression. Then when the Lehman Brothers collapse came in 2008, so they named it as Great Recession. Great Depression and Great Recession. Why they use a similar one? because they thought that just like Great Depression, a Great Recession will be once in a century affair. So that means, at least for another 50, 60 years, at least for another 1 century, there should not be a big event like Lehman Brothers collapse. But unfortunately, in 12-year time, we had another very big issue. That's a coronavirus. So we have already seen 2 major disasters in the last 25 years, and hopefully the next 50 years or 100 years, there is no such big disasters. Barring unforeseen circumstances, there is a possibility Nifty may go to 22,000. Hope you enjoyed watching this video. Thank you for watching.